The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and we're here to talk taxes because it's tax season. The IRS is open for business on the 29th of January. We're open at all of our offices, 9 to 9 Monday through Friday, 9 to 5 on Saturday. We have our mall office in McKinley that's open on Sunday, and we want to help you. Our phone number here in studios, 803-0930, 803-0930, star 930 on a cell phone. You can text us, 716-803-0930. And I drugged Chris out of the office. Hey, Chris.
Hello, Esther.
Hello, Christopher. Okay, there's a pending legislation that people should know about. I mean, we keep people abreast of what's happening, don't we?
Oh, we most definitely do.
So there's pending legislation for people with moderate to lower income, people with children under the age of 17.
Correct. The additional child tax credit is looking to get. Are you talking New York or the IRS?
Well, let's do the one that's pending at legislation.
Okay, yeah. So the IRS the government's looking to expand the additional child tax credit.
Right.
So the child tax credit is still $2,000, but remember that credit starts off as being a Pac-Man credit, as my wife says, a non-refundable credit. It just eats your taxes. If you have any left of that one, then it transforms into the Energizer Bunny, the refundable credit. So that they're looking at, it capped at $1,600 last year. They're looking to bring that up to $1,800 for qualified people.
And they may do it for this year.
Correct.
So as of yesterday, it looked like they were trying to push this through so that many people that would qualify for the $1,600 refundable child tax credit are going to qualify for the $1,800 refundable child tax credit. So you just might want to wait to send that in for the next couple weeks to make sure that it doesn't happen. Because it looks like it's going to happen.
Because who knows is the IRS going to automatically adjust it?
Which would be nice. I mean, you'd think that they could, right?
Right.
So anyway, and the other thing is on the state of New York, you didn't get the Empire State Child Tax Credit until the child was 4 to 17. They have expanded that, so now it's for any child under the age of 17. So that's new. And of course, remember, business owners, you got to get that BOI registered with FinCEN. And if you're somebody with 1099 employees, you got to really take a look at the reclassification that the Department of Labor is coming out with. So I had a gentleman call me yesterday, and he said, I have a small business, under 20 employees, limited liability company, and they're all on 1099s. And I said, oh, well, they wrote the law just for you, you know. So that's new. The other thing is, this time of year, people always say, how much do I have to make before I have to file?
Right.
But that really isn't the criteria, is it?
No, we got to ask so many other questions.
Because there's money out there.
Yep.
So let's just say that a mom of 4 who makes $15,000 a year as a server calls up and says, do I have to file? Does she have to file, Chris?
That's not the right question. The question is, should she file?
Right. But does she have to file?
No, she does not.
Because she doesn't have any tax liability. But this is what she has in the tax law. She's got, because she's working and has children that are under the age of 17 living in her house. So actually, it doesn't have to be 17. Because but many of them are 17. She gets the earned income credit of $67.61. So they're going to give her that money. Plus, they're going to give her another $4,800 in refundable child tax credit.
Wait. That could go up to
It
5,400.
could go to 54, right, if they change the law. Plus, the state of New York is going to give her 25% of the federal EIC, or another $1,690, and she gets $300 for the Empire State Child Tax Credit. So now her refunds are $13,551. And if she paid daycare, she's going to get another $1,700 refundable from New York State. So this mom making $15,000 would get a refund of $15,251. Did you get that? She made 15, pays no taxes, and we're going to send her $15,251. So does she have to file? No.
No.
Does she want to file?
Most
Yes.
definitely.
And we're going to give you some of those examples today of people that don't have to file, but they want to file because there's money on the table.
Yep.
Because it's really a way of manipulating people to get income. So her income really isn't 15; it ends up being 30. But the extra 15.6 is completely tax free, right? And she's going to get free health care,
Right.
right? Okay, let's go to the phones. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930, and we're going to go to Frank. Hi, Frank.
Hi. Boy, that was an interesting story. I'll have to go back and listen to what you were saying, how that woman could get her double her money.
Right, it's better than going to Vegas.
Yeah, that is something. Are losses on, like, an investment fund, are they, if somebody had other income that might possibly be taxable, would they be able to subtract and say, well, I put money into a fund and they lost $12,000 for me, or do investment kind of vehicles that way?
Okay, so here's the thing, Frank. If you sell, if you sold your stock and investments and you actually had a loss on those investments, then you can use that loss to offset other capital gains and losses. And in addition to that, carry forward up to $3,000 of the excess loss to offset other income on your tax return. And if after that, let's say you had a $10,000 loss that you can use $3,000 against other income, and you're going to carry forward $7,000 to next year.
I did have a loss because when I found out what these knuckleheads did, the guy decided to just vacate my positions, put them in reserve, and then I closed out the fund and got away from them altogether. And
so you actually sold the stock?
Well, I don't know. I guess it really was stock. I didn't even know that I was in individual stocks. I thought I was in a fund.
Well, you were in an investment fund, correct?
Yeah, exactly.
Okay.
Right.
That you used a stockbroker to purchase, an investment advisor to purchase.
Right, correct. Yeah.
Okay.
And so then I found out that there were losses, and then the guy, he didn't know what was going on a few months ago and said, "Oh, it doesn't look good, and I'd like to get you out of that." And then it was sort of just put in reserve, and then I just decided to close down with them.
And that was before the end.
Or is that just me closing down my stuff? It's not a
but
loss.
that was before the end of the year, correct, Frank?
It was. It was when the stock market got screwy there in September,
Yep.
October, and things went down. And instead of offering me advice about,
we're making it sound simplistic, but
yeah,
it's what they're going to send you a summary sheet probably in March that kind of details the transactions, buy and sell, and dividends and capital gains. And so that's what you're going to use to do the return. But to answer your question, yes, you can offset dollar for dollar on your Schedule D, the gains that you had in your stock portfolio. Plus, if there's anything hanging over, you can take another $3,000 to offset other income. And if you used it all, then it's a loss carry forward. You dealt with that the other day, right, Chris?
I did. I mean, you're going to get a 1099-B in the mail, which is the brokerage statement that shows the sales and the basis. So like Esther was saying, you get to use that. But to claim all that loss, you would have to have other gains. Otherwise, you're limited to a $3,000 deduction on this year's return, and then the rest carries forward to next year to bring income down another $3,000 and then another $3,000 until it's all used up.
Right. Yeah, none of that would probably apply to me because I was had savings that I was living off of, and then I inherited a bunch of money.
Oh,
and
so
that's
you're
how I
saying you
got it.
don't have any taxable income, Frank?
Yeah, well, I was just kind of asking in general, just because you were on, and I know you know your
Yeah, well,
All right,
you still want to do that Schedule D, first of all, because they'll tax you on it if you don't do it.
That's right.
But second thing is you want to show them you have this loss carry forward for one day when you do have income, that you have that out there to help you.
And the other thing is, if
let's
you
say I had money that was in a savings account just sitting there, and I'm using that to like pay for my stuff, and then somebody dies and leaves me a whole ton of money, and then all I did was just accomplish losing money. So do I still? You're saying I should still go?
Yes,
someplace
because
and file. I should come to you guys and file my
okay,
tax.
well, and don't have to. We would like you to come to us, but you don't have to. When that brokerage statement comes to you in March, it's going to show Frank sold $50,000 worth of stuff. Now it might have cost $80,000, but they're going to show the 50. The IRS is going to see the 50, and they go, if Frank doesn't file a return, we're going to send Frank a bill. If Frank files a return, then Frank will be able to show that he paid $80 against the $50. He's got a $30,000 loss. But you're going to have to do the return to show to the IRS the numbers so that they don't bill you.
So I'll get this paperwork from this place that I invested in and
That's
then got
right.
away from. Now the original money was in an Ameritrade account. Then I opened up my own Ameritrade account so that the broker could divvy up the inheritance things.
Right.
And then I got that, and then I sold that stuff off. Am I going to get one of these?
You are going to get one. Yep.
And what is it called? The Schedule D?
You're going to get a 1099-B as in boy.
And you report it on the Schedule D.
Okay. Because inheritance is not. Is that?
Well,
is that-
some inheritance of money is not taxable. Inheritance of IRAs, inheritances of stock, inheritances of annuities, those are taxable.
Okay, so I'm going to have to keep all these papers there and bring
Right.
them into somebody like you that knows
Right.
what they're doing, and
Right, Frank.
we'll have to go through it.
All right.
Okay, good.
Hey, thanks for
Thank you,
calling.
Esther.
Good call. I'm Esther Gullius, the tax lady from EG Tax. We're going to take a short break. We're going to be back with Mike and Bill and all of your calls on the other side.
We are family. I got all
Hey,
my
to us,
sisters with me.
you are family, and I want you to think about us as your friends and your family. And if you have tax questions, we talk to you. As a matter of fact, I was talking to a guy yesterday that was kind of in Timbuktu, and we did his tax return in Batavia and or Warsaw, and there was something that he had done that was incorrect. He sent me over the correction. I did an amended return and took care of it over the phone for him. So we're in the corner for you. But here's the other thing we were talking about: who has to file? So let's say retired person under the age of 65, working part time, getting a little bit of Social Security, around $20,000, makes $8,000 working part time. Does he have to file, Chris? On
No,
$8,000?
no, he
doesn't
doesn't
have to file. But if he does file, he'll get an earned income credit of $600 on the federal. He'll get a $180 earned income credit on the state of New York. And he was paying property taxes, and this is the last year for the New York 229, and he's going to get a refund on New York State of $350. So this guy that doesn't have to file is going to get a refund of $1,130. So he wants to file.
Yeah,
That
because
happens
they're
all
not
the-
going to.
And I'm going to tell you, 229s, I can't tell you how many people are sitting around paying property taxes and they don't know the state of New York is issuing refunds for the last year as a property tax rebate.
Right. You had 21, 22, and 23.
Right.
Those 3 years.
I did this lady's return yesterday. I was doing her son a couple days ago, and I said, your mom's in Tonawanda. Isn't she paying quite a bit of property taxes? Yeah, she is, So I did her last 3 years' returns. She got $1,150 back.
There you go.
And she didn't think she had to file. Okay, we're going to go to Mike in Tonawanda. Hi, Mike. How can we help you, sir?
Hello, and thank you for taking my call this afternoon.
Yeah.
I have a question. I've been caring for my father, claimed him on several tax returns. He died in March of 23. can I claim them as a dependent for 2023?
If in 2022 and the previous years you had given him over 50% support, and in 2023 you were continuing that with that same method of support, then yes, you can claim him as if he was there all year.
Okay, I appreciate that. Also, I have a 20-year-old daughter living at home. She started working part-time in 2023. Can I also claim her as, I guess, a qualified dependent?
How old is she?
20.
She's 20. Is she in college?
No, she's not.
How much money did she make?
About $7,000.
No, you can't claim her. $4,700. And once a child reaches 19, unless they're a full-time college student, and they make more than $4,700 in taxable income, they can no longer be claimed as a dependent.
Okay, and she can't claim herself because I supported her.
No, she would claim
she'll claim
herself.
herself. Yeah.
Oh, she can?
Yes.
Yes.
So she can be her
But
own
at
dependent?
$7,000, she's not going to owe any money anyway.
Okay. And then I saw in a tax package I looked, it said something about, additional help, $350 deductions and credits that are available. Is there
That's
some
the
type of
that's the New York
exclusive list?
that's the New York 229. Do you pay property taxes, Mike?
Yes, I do.
Approximately
It's
how
only
much?
New York State, huh?
New York State last year.
Okay.
If
about
you haven't done it in the
$500
past, you can amend your last 2 years' return and get that money back on New York State.
Right. It depends if if you pay more than 6% of your income to your property taxes.
Not
Okay.
counting Social Security.
Right, 6% of social, or 6%
Not
of
counting
income.
Social Security. Right. And have you been filing head of the household, Mike?
Yes.
Okay. And you'll be able to do it again this year because of Dad.
Okay, very good. I thank you very much.
You're very welcome. Thanks for calling.
Bye-bye.
Bye-bye. Okay, and we're going to go to Bill. Hey, Bill, how can we help you, sir?
Yes, quick question. I had what should I say? I was over on income for 23, and it was recommended to me that because I have Social Security also, and then with my income, I was about 10 over. So it was suggested to me.
What do you
that
mean over? Over what?
10 over the limit
What limit?
of Social Security.
How old are you, Bill?
I received.
How old are you, Bill?
Currently, I'm 66 and a half.
Okay.
At the time, I was 65.
Okay.
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 So, and I'm married. My wife is on social, and I work. But last year I made, in 23 I made 24, 23, 22. Yeah, 22. I'm sorry. What I'm trying to remember. My God. 23. We're in 24. 22. I made too much. So, filing in 23, the recommendation was to do 2 IRAs.
Yeah, but that's not, unfortunately, you're talking about paying back Social Security for the
Yes,
other
I had to
listeners,
pay
right?
back- I had to pay back about $5,500.
Right. So what they're going to do is they're going to systematically take it out of your benefits is what's going to
Yeah,
happen.
an IRA won't help that you being over. But if you made 22,000, you're only like 2,000 over.
Right.
No. I made about 10,000 over.
You
Let me
just
say
In
said
that.
your
wages.
W-2.
No, Bill, in wages, right?
In wages, on the regular wages, I paid full taxes. New York.
No.
State.
How much did you make in wages?
I made about 31,000.
Okay.
Okay, you are way over. Yeah. Okay.
Yeah.
So it was recommended over a number of months that I do an IRA at the end of the year for my wife and I, which accumulated around 12,000. I had to do, which I did, and that was the recommended to me that would offset any issues with Social Security and federal and state.
No, it won't.
It won't help with the payback
Not
of
with
Social
the
Security.
FICA, yeah.
It will help on your tax return, but not the
Right.
payback of Social Security.
So it was really a waste because it cost.
Well, it's
me-
not going to be a waste
the
because
interest on
it's
the IRAs, because I did a home equity to cover those out of a pocket expense.
oh well,
I didn't have the extra cash to do it,
yeah.
and so because I lost about $750,000 about 10 years ago on some different restaurants and stuff. But anyway,
Well, but
neither
anyway,
here nor
yes,
there. This was a
just to
recommendation that
let
was
people
made.
know what you're talking about, once you're under the age, normal retirement age, you're limited how much you can make and still collect Social Security. In Bill's case, he made over that, and so he's going to have to pay back Social Security for a dollar for every $2 that he went over, and they will take it out systematically for him. So unfortunately,
Which I did. I'm fully paid, but this recommendation, so I didn't gain anything by doing that, correct?
well, you are on your tax return, but that's all.
No, but that was for last year.
You haven't done the return yet, have you?
No. This was 22. I made too much over, about 10,000 over.
Oh, 22?
It was recommended for 22 into 23.
Okay, that won't make any difference.
Past year,
No, it
so
won't
this
make.
past year, I paid them back 5,800.
Yeah, right. There's
even
nothing
though
you can
the
do.
person recommended
That's
that
correct,
I do the
Bill.
IRAs. What's that?
That's correct. It didn't. It's not going to help you on the payback of the Social Security.
So they already took it out 3 months.
Yep.
They took out 3 months, which
Yep.
was equivalent to about what they did.
Right.
And then it was also said to me too. So I would like to.
Bill, I'm gonna have to break right now because I have to go to news. Do you want to be on hold, or should I just call you back, or what would you like?
Well, I know you from years past, Esther, and I would like to get a hold of you and sit down and talk.
I would love that. I'm going to put
'cause
you.
I know
I'm going to
you're
put
a-
you on
Give
hold.
our off-
I'm going to put you on
bless
hold.
you. Thank
Bill,
you.
I'm going to put you on hold. Okay, so all right, we got Bill on hold. I'm Esther Gilius, the tax lady. We're going to break for news.
We are family. I got all my sisters with me.
Hey, to you, to us, you are family, right, Chris?
That's right. Everybody's family. We love our customers.
We do love our
We treat them like
We do.
family
We
because
do.
there's.
Actually, I think we treat them better than family because sometimes families want to shoot at each other, but we love you. Anyway, should I file? And I know I got phone calls here, 8030930, 8030930, star 930 on a cell phone. Do I have to file? I'm a single guy paying child support through the New York State collection. I'm up to date, but I only made $8,000 last year. Do I have to file?
No, you don't have to file.
But you want to file.
Yep.
Right? Because in this case, when you are a non-custodial parent paying through New York State collection and you're up to date, then you qualify for an earned income. If you qualify for the earned income credit, but you can't get it on the federal because they have no provision. But the state of New York will give this guy $1,500 because he filed through New York State collection.
But
so a
he-
non-custodial parent.
He will get EIC on the federal because if he's under
If
65.
that's true. He will.
So
get
he would
something.
get even
That's
more
right.
money.
That's right. That's exactly right. He would get the EIC on the federal, and on New York State he gets the non-custodial EIC,
Yes.
which is more money. But $1,500 and you don't have to file.
Yep.
And if you're getting the impression that we're like giving people money out all day, we do. we do, right?
Yeah.
All right, let's go to Marvin. Marvin, how are you, Marvin? How can we help you?
Oh, good afternoon. Good afternoon, Esther. I'd like to know if I have a CD that matured, and the interest on there. I'm on Social Security. I'm over 66. What tax rate will the interest be added? Is it added onto your income?
All right, so Marvin, besides Social Security, do you have what other source of income and your interest income?
Pension.
How big is your pension?
Total Social Security and pension.
No, not Social Security, just your pension.
About 40,000.
Okay, are you single or married?
Single.
Okay, so he's going to end up having to pay part of his Social Security
Right.
and the interest. So
Yeah, you're looking probably. You're going to be 12% for some of it, maybe 22%. So figure on an average about 15%.
right.
Well, the CD is in a family member's name also. Would it be a benefit if
Whose
they,
Social Security number?
They're both.
Who's listed
Who's
first?
listed first?
I am.
Okay. The only thing that you can do is you can do a nominee distribution to that family member, issue them a 1099, and you can take the nominee distribution off your Schedule B if that's going to hurt you. So that's a way around it.
Oh, and that's okay with the IRS? If
Yeah, well, that's the law, yeah. So you would actually, if let's say the interest was $10,000 and 5 of it's yours, 5 of it's theirs, you would do a nominee distribution to that family member in the amount of $5,000. Then on your Schedule B, you take the nominee deduction, and that would save you paying taxes on half.
Okay, and then but naturally they would have to pay taxes. Then
That's exactly
on that.
right. That's exactly right.
But at 66, there is there a time that age where you don't have to pay?
If you
Like,
got the money, Marvin, they want it.
I mean, where are you retired from?
From the Teamsters.
Okay, so New York, you're still going to... I was thinking
Right.
if he was a state employee, government employee, he wouldn't be taxed, so it may be
Right.
not a good thing to do the nominee.
Right.
But, yeah.
But what's going to happen too, Marvin, you're at that place where the more money you get, the more Social Security you're going to pay until you get to 85%. So you might want to
they
look at the
penalize-
nominee distribution. It might be the best thing for you.
So they penalized for your Social Security
Yes.
income from money that you made already? I mean, that's
Well,
not-
the more money you get,
I mean, I'm
the
not
more
working-
money you
not
get,
working.
the more Social Security taxes you pay on your Social Security until it gets to 85%.
Okay, thank you very
You're welcome,
much.
Marva. Bye-bye. I don't know if he really meant that. You think
Yeah.
he meant that?
No.
Oh, I don't think so either. All right, we're going to go to
Mike.
Mike. Hi, Mike. How can we help you?
Caught something on a TV program the other day. You
Yeah.
know, if you work from home and the company you work for is out of state, sometimes you get a deduction and you don't pay both state taxes. And they said in some states you pay taxes from both states. I think this is strictly state tax, not federal tax. I've got a son that lives in Florida. The headquarters is in Florida, but they've got a bunch of conglomerates around the country, and he works for one in Massachusetts, but he gets his paycheck from the one in Florida, which is the head.
Well,
In Florida, of course, there's no tax, so
what did he
happens
just...
in that case?
Did he just start working there? Was this prior to COVID?
No, he's been there over a year.
So this was after COVID. See, that's the big thing. But the company he works for, they're saying it is Florida.
Yeah,
They're not-
He lives in Florida.
Right. I'm just making
Different
sure it's not the
places and acquisitions around the world, or not the world, around the country, and he actually does his part for one of the acquisitions in Massachusetts. So is he working out of state? But the headquarters is in Florida, where he is.
Well, the only time, I mean, do they withhold Massachusetts tax from his paycheck?
Okay, so that would matter. I can ask him because I
Yeah,
did mention
because
something.
the only time he would have to pay Massachusetts tax would be as if he goes to Massachusetts. But what I was getting to earlier with COVID, because there are a lot of people working from home now, and they can work anywhere, so they move back home and they still work for their company from a different state. That is still up, believe it or not. The government is still trying to figure out how to tax these people, whether they're supposed to be a New York employee or a North Carolina employee, a Florida employee. You know, just because your address doesn't mean that's going to be. But if he's working in Florida for the Florida part, he should be fine. No Massachusetts tax.
Right, but in
that's
the
the
event, Mike,
headquarters.
but in the event, Mike, that they took out state taxes for another taxing jurisdiction, because if his home is Florida and he's working in Florida, then he should pay Florida. He would be a Floridian. He wouldn't pay any taxes. If they started withholding and taking taxes for Massachusetts, for instance, when he would file a Massachusetts return, non-resident, and get the money back.
Okay, because they said some states don't have that where you get the money back. You end up paying both.
No,
on the-
you don't. You don't pay both. You don't. You get a credit on one If you had, like, if you were working in Massachusetts and New York, and you were a New York resident, and they were taking out Massachusetts taxes, you do the Massachusetts non-resident, then you'd get a 112R credit for taxes paid to Massachusetts on your New York return. The lovely thing for your son is he's a Floridian. They don't pay taxes in Florida, and if he's working
so
out
maybe
of Florida,
they were working on a way so they could get double taxation.
Well,
some states were going into it.
well,
I might have misunderstood the whole thing.
I think maybe, Mike. But if you need help, give us a jingle, okay?
Okay,
All right,
thank you very much. Enjoy.
Appreciate it.
I just want to mention,
Yes, sir.
too, because our previous caller brought up CDs and all that. On our website now, every week, we're going to update the interest rates.
Right. Because you can actually get interest rates up to 5.8% right now.
Wow.
And I will keep track of that, and it'll be on our website at egtax.com. Okay. Should I file a return? All right, here's another one. You have a loved one in a nursing home. You don't have to file a federal return. You basically are living on Social Security, but you did pay $140,000 last year to a nursing home for your spouse. Should you file a return?
Yes.
What return would you file, Chris?
You would file both, but you got to definitely file the New York because of the long-term care insurance rebate. So
And the nursing home and the
Yeah.
and the bed tax.
that's what. Yeah.
That's
the
what
bed
you
tax.
meant.
That's what
so,
I meant.
So the bed tax, the state of New York imposes a 6% bed tax when you are in a nursing home and your private pay. They give that back to you if you file the return. So this taxpayer would get a refund of $8,400 in bed taxes paid for the spouse that's in the nursing home. Okay, so you want to file a return.
Yeah.
I'm Esther Galias, the tax lady, 8030930, 8030930, star 930 on a cell phone, and you can text us at 716-8030930, and we got Frank. Hi, Frank. How can we help you, sir? Hello? Hello?
Frank?
Hello, Frank? Okay.
we just Frank, call back. We apologize.
Yeah.
We'll get you right on.
Yeah, we will.
But
Okay.
we got a couple texts. Esther, I haven't received my New York State Local and Retirement System 1099 yet. What do you recommend I should do?
It's going to be there. It's coming. I think because the IRS didn't open up till the end of January this year, it gave everybody we all don't have to work so hard to get everything out, but it'll be out there. Something I worked with a client the other day. He didn't get his refund last year because they sent him that fraud verification letter, and he didn't respond. And so they were not going to give him any of his money back until he proved who he was. And so we had to make an appointment for him down at the IRS to go prove who he was. So if you got some of those fraud letters from the federal government last year and you didn't respond, they're not going to send you your money.
No.
So just want to let you know about that. Okay, we're going to go back to Frank. Hi, Frank.
Hi. Okay, I got a question, Esther. My wife and me are both living on Social Security, and our combined income is $42,369.
Okay.
I was told by an accountant that I used to use who passed that I no longer had to file for income tax, but I have $190,000 roughly in investments, and I was told I could take out approximately under $22,000 a year and still not have to file. Well, I'm scared to death of the IRS, and I don't know if I need to file.
All right. Frank, are your investments in an IRA?
Yes, they are.
All right, and you're not having any withholding?
He's not taking anything.
No,
How old are you?
No. I'm just shy of 68, and my wife is just shy of 69.
Yeah, so you could basically
21,000. He has 21,000 hanging over at that rate. If he's 40, okay, the 42,000 is just your Social Security, right?
Correct.
Okay, so that's 21 and and 22, so that's 343.
You roughly could take about 19,000 out a year and pay no tax to the federal or the state.
So I would feel safe then not having to file at all for income tax. I'm scared to death of the government.
Here, you know what, Frank? Call us at the office, 632-7886, and I'm going to put all your information into my computer, and I'll tell you exactly, because I think you do have a little bit that's still hanging out there to be taxed.
But
okay,
let me one other thing, Frank. Do you guys own your home?
Yes, we do. No more. There's no mortgage. We owe nothing on
how much are
vehicles,
how much are your property taxes?
Oh boy, just shy of about $6,000 a year.
Oh,
you have refunds coming
for 21, 22, and 23.
The New York IT 229 is $350 a year, $250 to $350 a year. Yours will be $350, and so you have to file to get those. So you have 3 years to do that.
Okay. All right. So basically, then I should just come in and.
I'm just saying you can call us and we can talk on the phone, but for sure you better do the IT 229.
Okay. All right,
Frank.
Well, I appreciate it.
You're
Thank
welcome.
you very much.
Thank you, sir.
Bye-bye.
Bye-bye. But part of what I was talking about before, Frank, we were talking to Frank, is if you last year got that letter from the federal government and you ignored it, and you go to file your return this year and you find out that they say, we're not sending you the money until you answer these questions, you have to answer those questions because they're verifying that you are actually the taxpayer. Now, maybe it's a way to hold up the refunds. I don't know. I think it really is. They are investigating for fraud, but they ask you everything but your shoe size, I will tell you, on this report. So if you have that problem, let us know. We'll help you with that.
Yep.
Okay, and then we're going to go to Maureen. Hi, Maureen.
Hi. Let me get you off this radio here. I'm actually calling for my sister. She reaches full retirement age this year. She turns 66 in March, so I think she reaches the full benefit by November.
Mm-hmm.
How much can she make this year? Is it more? Can she make a little more?
Once she hits normal retirement age, there is no limitation.
Yeah. Now, the year of normal retirement age, is there some increase there as well? I know last year she couldn't make over, 1 year it was 19-something, and then I think it went up to 20-something. This year is the year of her full retirement, and we thought that she could make more.
Yeah, she can make more. I think it is limited, but it's like 60,000, something like that. If you want to call our office, we can look that up.
We have all the charts. We'll look it up. I don't have it memorized.
Okay, that's great. Thank you so much.
All right, thanks, Maureen. Thanks for the call.
You're welcome.
Okay. And then we have Ron in Amherst. Hi, Ron.
Hi, guys. My question is regarding, I have two girls in college, age 20 and 18.
God bless you.
Yeah, thanks. We pay partial out of pocket for both of them. They're both in Ohio, and they both make wages in Ohio. So I guess my first question would be, do I have to do a separate tax form for them in the state of Ohio, although still they're dependents of my wife and I here in New York? And then my second question would be, what do I do with, I guess, would be, I pay probably close to $25,000 to $30,000 out of my pocket for between the two of them for tuition. Is there somewhere that I report that, and are there any tax benefits?
All right,
for
so
that?
quickly.
Our AGI is about 165.
All right, quickly. The Ohio return they have to do. And by the way, Ohio also has municipal taxes. And then the taxes they pay on Ohio, they will get a credit for that when they do their New York return.
Yeah, so you have to do a New York and Ohio for them.
So you'll do a 112R in New York after doing the Ohio tax return. They'll get a credit on New York for that return. And even though and even though they have wages, they're not going to get their full standard deduction on New York State because New York State, I think, is $3,300.
$3,000 or
yeah.
something.
So they're going to need that 112R to offset that. You qualify for, I think. You do. You
Yeah,
said
it cuts off at like 180.
Yeah, so you qualify for the American Opportunity Tax Credit for the girls, which is a maximum of $2,500 per girl or $5,000, and it would be for the first 4 years of higher education. And on the state of New York, you will also qualify for the
education credit there, the
credit
272.
on New York State. So you should get about $5,800 in credits.
Okay.
You're going to need, each girl is going to get a 1098 T as in tuition. They get it.
Yep.
They have to give that to you. That's what you need to do your taxes.
Right.
That doesn't go on their return. It goes on your return.
Right.
Okay. So that's for whatever. And I guess to follow up on that, one is I pay for an apartment there. Is that
no
she needs to live
apartments?
there?
Nope. Strictly,
No apartments, just-
strictly education, books, and educational fees.
So the other one's still in a dorm. Does that count?
Nope. Strictly education and
Okay.
fees. So it's education.
Room and
tuition.
board does not count.
Doesn't count. However,
So
you can put
tuition
money.
and books.
However, you can put money into a 529 plan and use it for dorming, and the income would be not taxable.
That's
that it
what
grew.
we've been doing partial 529 because we didn't have enough to cover everything, just to make it manageable. To
Okay,
pay.
well, then you have to do that computation on New York State, which may adjust the New York State education credit, depending upon the 529. But anyway, the thing is, you don't get dollar for dollar. You get a credit up to $2,500 on the federal for each girl and around $400 for each girl on the state.
Okay, great.
All right?
All right, thank you
Hey,
very
thanks
much.
for calling. All right, and we got, wanted to talk about another person that thinks they don't have to file is somebody that has been paying their own health insurance. And they used to get a subsidy, but they didn't get a subsidy because they, at the time they had applied for New York State health, they were higher income and they didn't think they got a subsidy, but the bottom fell out. He lost his job, and so they're wondering if they should file because they don't have any liability, but they've been paying their own health insurance. Do they have to file?
They don't have to, but they would want to because you have to reconcile with that health insurance, and this would be a good reconciliation for them because they will get their money back.
That's right. And so that health insurance, if you're somebody that's been paying New York State of Health and you got no subsidy and your income went down, take a look at the premium tax credit because you could get some money back. And we're going to go quickly to Tom in Newstead. Hi, Tom.
Hi, real quick. Chris, I left a voicemail for you last week, so if you ever catch up, this is that question. I want to make a direct transfer from an IRA with charity. Do I have to let the charity know that it's coming?
You're over 70 and a half, correct?
Yes.
No, you
No, you
don't
don't.
have to let the charity know.
The charity will be dancing when they get the money, though.
I know they will. And it's Vanguard, and I did a pension repayment direct rollover, so it's the same thing in reverse, right? Just that I don't touch it.
All right. First of all, Tom, it's got to be out of an IRA.
It is.
All right, to do a qualified charitable rollover, it's got to be out of an IRA. You have to be 73, and it'll also, you just tell Vanguard.
Did you say 73?
No, it's 70 and a half. They never adjusted the QCD with
okay,
RMDH.
you're right. So 70 and a half, and then, but you just let them know that you want to do the qualified charitable transfer, and they'll your broker will ask who's it going to, and they'll take care of it for you, and your 1099 will indicate that.
Yeah, I've never done that before, but I think it's pretty straightforward. I want to make sure I was barking up the right tree.
Yes, you are barking up the right tree.
Yes, and I am paying attention. 70 and a half, not 73.
That's right.
Now, the other question is, what is my minimum? I was born in 1952. When does the required minimum distribution?
That's 73.
Okay. See, what I'm trying to do is I'm trying to get several $1,000s out of my IRA tax-free. That's what I'm trying to do.
Well, that's great. That's great. Well, give us a call, Tom, and we'll be very happy to help you. And sounds like you got a plan.
I'll be in there to get my stuff done pretty quick.
Okay.
All right. Thanks, Tom. I'm Esther Gulius, the tax lady from EG Tax. All of our offices are open. Our website is egtax.com. Ask the tax lady. Ask your question. I'll answer them right away. Until next week, I'm Esther Gulius, the tax lady from EG Tax with Christopher Fabian. We're going to scoot out of here and get back to the office. Thanks for listening, and thanks for being our loyal clients.